Hi, welcome to the Market Alert for Wednesday, the 29th of June 2022. So a lot to get through today. We'll kick off with the news. Bad news is bad news again. Stock slammed on macro meltdown, bonds shrug. Today's disastrous set of data reignited the bad news is bad news mantra, apart from last week where we saw the bad news was good news. So it just depends, doesn't it? Consumer confidence crashes in June. Richmond Fed survey plunges to COVID lockdown lows. Hope was never a strategy. And then this is interesting because this is prior to the markets falling out of bed. Futures commodities jump after China cuts quarantine. And they use this news to launch the cash market of the Dow and the S&P to a vertical rise, which we'll look at. So European sentiment picked up ahead of into the cash open amid encouraging COVID headlines. Absolute BS, isn't it? But it's always entertaining. ECB to launch first line of bond crash defence on Friday. Get this, same day QE ends. Yes, here's the criminal, Lagarde. What's she saying about this? We have decided to apply this flexibility in reinvesting redemptions coming due in the PEPP portfolio as of the 1st of July. You can't make this crap up, can you? Unbelievable. So they can't afford to increase interest rates, and any bonds becoming due, the redemption's due, they're actually going to reinvest back in. So it's actually QE by the back door. And finally, nowhere to hide from the collapse of the everything bubble. There is no means of avoiding the final collapse of a boom brought about by credit expansion, only whether the crisis should come sooner or later as a final and total catastrophe of the currency system involved. Yeah, it's called debt. I think it's 300 trillion now, somewhere in that region of global debt. It all ends, and it ends badly at some point. Today's news, we've got an OPEC meeting. That's a high priority. And, yes, of course, we mentioned this on Monday. We've got the three musketeers out today at 2 p.m. So watch the markets pre-Dow open there. Gold-silver ratio moving back to the upside. Expect this to continue. Silver absolutely slammed yesterday. $20 in the gun sight now, and actually I think lower. And I'll explain why when we look at the metals market. But let's kick off with the stock markets. We'll start off with the Dow. You can see yesterday prices being moved sharply to the downside. Everything was going swimmingly. If you look at the 30-minute chart, market sideways, moving up quite nicely. And then the pre-market, with all of that news that, the COVID restrictions are gone in China, etc., that sent the market up several hundred points, 250 points, and then all of a sudden consumer confidence came out, and that was it. We were down from the high 935 points by the close, also taking out the 200 MA there. But prices have been stable overnight, and I wouldn't be surprised if we don't see an initial bounce in this market as we did during yesterday as well. So we've got to pull back there to the 5-bar moving average. We've closed below it, but we're still long at the moment, despite the fact that we are becoming slightly overbought in this move. So watch for a bounce and then maybe another move to the downside. But we'll watch that as it unfolds each day. And in the German DAX, in the daily chart, not as big a move there. And you can see that we had some selling around, but also finding a bit of support at the 5-bar moving average there. If we go from this low to here, you'll see that we're only back at 50% retracement here as well. So a bit of support coming into the market. Like I say, I would expect this initially to move towards the upside, try and recover some of the losses that were seen yesterday afternoon. That's generally how it works. And yesterday, moving up sharply off the low of Monday, prices continued up, and then all of a sudden they were slammed down, but managed to recover, and then became a bit sideways and choppy. But from here to here, you'll see the market coming back to 89, just above it there, 89% retracement from there back to there. There are smaller retracements in there as well, but that's the main one. And then the news coming out and prices selling off down to the 200 MA where the market's found support. It's also retested the low overnight as well. You can see that there. And it's trying to get back above the 50 EMA and the DP. Of course, the market's going to be waiting for that, the Musketeers at 2 p.m. as well. In the 5-minute chart for yesterday, it was a good day yesterday. And the last couple of days have been good. The futures market moving higher, as we spoke of in yesterday's alert. Then sideways, the cash market opened and continued higher, and then was met by selling, came back to the DP, oversold, and then we saw a crossover, and then the market making its way back, with the momentum starting to drop off in this area. This area also, from the high to the low there, takes you to 78% retracement, where we've got some supply and a crossover, overbought, with divergence coming into the market as well. Lack of momentum. Market drops down, oversold, then a retest, and then back up again, where we see another retracement from here back to here, and then we've got another small one in there as the market waited for the Dow to open. But a very good day yesterday in the DAX and over the last 2 days, which I'll show you in a second. We then saw the market moving to the upside sharply following the Dow, only up about 70 points, trading sideways, became overbought, and then the market moving lower. So over the last few days, and since the last video that I recorded, the last from the 19th of January to the end of yesterday's trading session, you can see there now we're just getting close to 20,000 profit on the account, 195% up in a market or in a trading strategy that's only producing 53 winners to 47 losers. But the winners are greater than the losses, and that's the key. That's definitely the key to the strategy. You can see the equity curve is nice. There's no major drawdowns on this, and that's because I'll keep the losses small. I'm not bothered about losers, but when I get onto one that's really good, I just hold it, as you will see here for the last couple of days. 12 gross, 23, 1023 net. And there again, you'll still see 52 to 48, but it still works. It's just a matter of developing that mindset that losses are no big deal. If they are a big deal, then they will play and wreak havoc. But as you can see there, it works just fine once you can develop the psychology. And as long as you've got a repeatable pattern, that's all that matters. And in the S&P, similar to the Dow, you see closing below the 5-bar moving average, just as the Dow, also overbought, finding a bit of support overnight. Let's have a look at the 30-minute. Again, fairly quiet in the pre-market, and then the morning session, then the Dow and New York opens there, trades up to the high, consumer confidence, and bang, all the way down. But also, you'll note that we're coming off the low as well, and the market again trying to get back above that 200 MA, 50 MA, and head back towards the DP to keep this new up move that we saw the start of last week in place. In the FTSE, see we traded up to the 200 MA in the daily charts. We've got a bit of selling going on there, and also the 20-bar moving average, 50 EMA, is also in this area as well. I'll just draw in a potential retracement there, but the market's holding at the moment. These would be the downside targets that I would look at, including the 5 MA there. Look a bit more detail in the 30-minute charts. You can see yesterday morning the market trading up 100 points, and then by the time, and it held really well because the DAX came screaming down in the morning after it made its initial move to the upside of 100 points, and the FTSE held really well. We've got a double top retracement there, just slightly higher, but we've got the momentum dropping off there, got divergence, and then the market moving down and giving up 80% of its morning move there. Overnight prices have become oversold, trading in a sideways move at the moment. Again, it needs to get above those averages, the 20 bar, the 50 and the DP. And in the currencies, still very quiet on a daily basis. There doesn't look like there's an awful lot moving. The market holding above the 20 bar moving average at the moment. There's been demand for the last couple of days. In the 30-minute yen, you can see yesterday that the market was showing some momentum. Despite retesting the DP level, we've got a cluster of volume there. And then the market moving to the upside there, just shy of 100 points before becoming overbought with divergence and then switching back to the downside and actually taking out to the DP, and that's because the US dollar moved higher yesterday. Overnight, so we've got a nice cluster of volume here as well as the markets managed to trade off Tuesday's low. Again, you'll see there the market moving up to the DP, but finding a bit of an issue there, and that's because the dollar index is starting to move higher on the overnight. In the pound, down yesterday, dollar up, which has caused pressure in the downside pressure in the metals markets as well. An interesting level here as well. Don't forget the bankers are talking this afternoon. It'll be interesting to see if Bailey hints at increasing rates. If he does, then that will send the market up. I've just deleted the 89, but it's an 89% retracement there, so an important level. Looking a bit more detail, you can see we're coming off close to yesterday's low after the market also went up, came back down, 89% retracement before breaking the close and the 200 MA there and moving to the downside. And then finally in the metals, we'll start off with silver, absolutely hammered to the downside yesterday. It's got to hold above that 2067. It's not going to. It's also going to take out this low to the left as well, where we saw some support coming in the other day. It's also going to take out this low here as well. And it's going to continue down to the $20 target that I've been hoping for the last few weeks, but I have a funny feeling we'll go lower. As I mentioned earlier, if we look at the monthly chart, I think we're going down to 1918, which is the 200 MA in the monthly chart. That's the target the banks are going to be heading for, so I may stand aside at the $20 level and see if I can buy below that, closer to the $19. It's going to go there. You only have to look at the 30-minute chart, what they did yesterday. The market was up nicely, but any opportunity by the bankers to sell silver and crush it, they will do. And if you want to see a really good interview about the manipulation of these markets, then have a look at Andrew Maguire and Bill Murphy from GATA in last Friday's video. Absolutely incredible. And they take apart what was happening. And in fact, even the BBC, there was a BBC documentary put together by Andrew Maguire explaining all of this way back in the 2000s, and they've continued to do this. They also talk about the 900 million fine that they've received for crushing the metals, and it's they'll only allow it to go when it goes, and that's why I posted this one here, nowhere to hide, and this is a case of just hedging against when there is nowhere to hide, and also the onset, of course, of the central bank digital currencies as well. I prefer to have something that is solid, real, and in my own possession, as it were. So another reason why I'm a holder of the physical as well as trading the markets as well. But for me, we're still going lower. Like I say, the monthly chart is dictating the area where we're heading to, and you can see that we've broken these other lows and we're going to break that. We'll do it today. I have no doubts about that, and that's because if we go to the dollar, you will see yesterday managing to move sharply to the upside, and we're going to go back to the highs in this, aren't we, as we normally do. So there's your upside target. Go back to 105, and then we quite easily go down to the 1918 level. Gold's holding up well though, as you can see there, only coming back to the 78.89, well 78% retracement there at the moment, which is why you're seeing the gold-silver ratio moving to the upside quite strongly there, and like I say, you can expect that to be taken out as well. We have actually come back about 89% on this bar, but we've got another one now where we're making our way back as well. So any close above this recent high at 85, we'll see the gold silver ratio continue to move to the upside. And if you want to see what it looks like on the longer scale, this was a great area to have bought gold and silver, which I did do when it happened in March 2020, and that's because of the shakeout with COVID. We then had a massive rally where I managed to make 20 odd thousand in some ETFs, silver ETFs, and I have no doubts about that. I'm still holding some of those as well, and I will add to them as if this continues up, bring it on, not a problem, because it's you make the money a lot quicker when the gold silver ratio moves to the downside, or when it's allowed to, I should say. And then finally, crude oil continues to move to the upside. Yesterday we saw the market going above the 113 level. At the moment we're holding at the 62% retracement, which happens to be the 113. But if I recall, we've got a bit of an OPEC meeting today, haven't we? That was the first one we looked at, so that will have an influence today as well. Okay, that's it for this one. Like I say, it was a lot to get through. A lot happening at the moment, and today will be interesting, like I say, when the Three Musketeers are out at 2 p.m, so keep an eye on that. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.